Today, we're going to be doing some technical analysis for the SPY, Qs, Apple, Tesla, Amazon, and Nvidia, and we're even going to touch on the VIX, so stick around for that because it's very important. The VIX might be telling us that we may be getting some kind of move in the next two trading sessions. First, let's get into the data that's coming out tomorrow morning. The main thing we want to pay attention to tomorrow morning is that retail sales month over month, obviously. So what we want to talk about is exactly what kind of reaction could happen if the retail sales month over month comes in hotter than expected. So that would be above zero point 0.3, above 0.3, and especially above the previous of 0.6. If it comes up above that, retail sales is kind of a indication of how the consumers are spending their money and how much they are spending. So if that number does come in higher, that would not necessarily tell the Fed that they have to raise rates, but it would indicate that we are in a growing economy. And if we are in a scenario where retail sales is going up, especially on a month over month, meaning higher than zero point 0.6 this month, then we would have to consider the fact that inflation will end up going higher. But as traders, we want to see how the market is going to react from that data. And what we do is we see what is going to happen in front of us. We look at the outlook for tomorrow, and then we see how the market reacts. And overall, I just want to bring up the daily to remind you to pay attention to these risk ranges, these purple lines in here. Okay, so the top up here is the risk range that is priced in from the options for the week, and this is the bottom of that range. So right now we are looking like we are slightly heading towards the top of that range. But as we go into shorter time frames on the 30-minute, something that we talked about is actually playing out, and that's this drawing that I did actually discuss in my last video, and that was one of the possibilities. Okay, so the possibility here is that we are going to test these highs one more time, and you notice we are staying in that area. So it does mean that since we are compiling around this area, we do have potential to come up above these highs, but you notice that right above these highs, we do have that weekly expected move, and we're only getting into Tuesday, and that's very important. When you come out of these expected moves very early on in the week, that can signal that we do want to move back into these purple lines before the week is over. Something else that I will be paying attention to on this SPY at least is the fact that we gapped up today and we created this. And if we do gap down, we actually have a potential gap down reversal for tomorrow. So if that news does come out, hotter than expected with the retail sales numbers, we actually could see a gap reversal here. Now, overall, what I want to point out to you is on the MACD and the RSI, we actually do see divergence at these levels. It has not confirmed yet. But as you can see right here, we do have this divergence right here. So we could see that start to play out and come to fruition, but right now it has not confirmed. So we want that to confirm before we see direction. But as we do have a data drop, we could see some kind of, gap reversal or island reversal in the morning. I think I said I was going to touch on the VIX at the end, but I do want to just show you guys this as we do talk about that possible reversal coming in. The VIX, we said, had the potential to get we had some kind of up day being predicted by the VIX in the next two trading sessions with that 85% chance because the VIX was up by more than 10% on Friday. And we did get that green day. So now tomorrow, that means we don't necessarily have that 85% chance for a green day. Actually, the VIX was down by more than 10% today, which tells us that we actually have an 85% chance of a down day in the next two trading sessions. So make sure to write that down because that is going to be very important. And the other thing I just wanted to point out on the VIX is that we're starting to get this Bollinger Band starting to come tighter and tighter, okay? And when this Bollinger Band does get tighter, it leads to expansion. So what happens is, Bollinger Bands, they like to squeeze together, kind of like it did right in here, and then we see some kind of big move. So that doesn't mean that we can necessarily predict which way that is going to go, but the VIX is predicting that we get some kind of down day in the next two trading sessions. So if these do start to get tighter and tighter over the next couple days, or maybe even tomorrow they get a little bit tighter, we could see some kind of rapid move upward or downward. And since we do have Jerome Powell talking in the next few days and a bunch of Fed speakers, we overall will be paying attention to some kind of expansion in the VIX in the next, by the end of the week. The other thing I just wanted to point out before we get back into the Qs is the difference between the SPY and HYG, those high yield growth bonds. And what we were talking about on this channel was the fact that we did see some kind of divergence here. Okay, there is a divergence between this and the S&P 500. The S&P 500 is actually, looking like it wants to go fill this gap way up in here. Meanwhile, HYG, the high yield growth, is actually not confirming that move. And a lot of those times that means one of those are wrong. That means either the SPY is wrong or HYG is wrong, and normally HYG is correct. And if we look at the price action from today, we can see that the SPY was actually up 1.05%, while HYG held almost at 0% gain today. It held very even. So it's just something we can pay attention to and use it as a little point. Maybe that we need to not get too excited, not get any FOMO, and look for more consolidation or a pullback before we want to head higher. As we jump back into the Qs here on the daily, we do have this, little wedge here or continuation triangle, if you will, starting to form. Now, we are approaching the top of our weekly expected move on the Qs right now, which is held kind of right at this high from last week. So we could see some kind of move upward to test that high, and then maybe we do get that down day. But overall, I am still leaning towards a downward move, and we do have a new gap right here that likes to fill within the next 5 trading sessions. So we could see some kind of little more upward move, but overall, I am still leaning, especially for a healthier bounce in the market, a bull run at the end of the year. I would like this to come and make some kind of higher low or make that big dip and give us that daily divergence between these lows. The Qs here on shorter time frames like the 30-minute, it's not necessarily telling us that there is going to be some kind of turnaround. I guess if you wanted to, you could make some kind of, wedge or something here, but I just don't really see that in front of us. So I think there is potential in this move to head a little bit higher and maybe get us outside of that weekly range, just because it would be testing that prior high up here. So we just kind of have to see how that data plays out in the morning. The data is going to be very important, and overall, it doesn't matter how many Fed speakers talk. It overall just matters what kind of data we're seeing, and that's what the market is going to react to. And it's interesting, if you just look at the side of my screen as we pull up Apple on the daily, we can see that there is a ton of green, but the only stock that actually was red is Apple here. So Apple might be telling us that this upward move is not necessarily the right direction. We actually gapped below all those moving averages, kind of like I was stating in my last video, but we did fill that gap. Those gaps like to fill in the next 5 trading sessions, and we fill the same day on this one. It doesn't necessarily mean that we can't still make that downward move at this point, but we are seeing that possible, upward move touching the top of our purple zone to then extend higher. So we have to be open to that happening, because that did happen over here back on the date of August 18th. We actually saw that rapid move upward for a few days, and then we touched the top, and that's what springs us higher. So we do have to be open to that. But as if Israel does actually invade, do that ground invasion on in Gaza, then we actually could see some rapid selling in the market. We just still want to, on Apple, pay attention to this purple zone. If we get that big reaction out of this purple zone and out of our wedge, we could see more upside. But we want to see if we get back into this purple zone, if we hold in it and then extend higher, or if we start to break this zone. I do believe we will start to create a third point on this wedge. Okay, we will start to head lower and maybe touch somewhere down in here and give us some kind of triple divergence, which will be very, very strong. And if we get some kind of good news at this point, we could see an extension upward and get that bull run into the end of the year. But we'll have to talk about that in the future when it actually, starts to play out in front of us. As we go into shorter time frames, you can see Apple has the potential to move higher here. It's not necessarily oversold or anything like that. So the 30-minute is looking okay at this point, and maybe Apple's actually wrong, and we actually do need to see some more extension in this. I would just be worried if we do get some kind of rapid move upward in the morning, that we do get rejections somewhere around these highs. Okay, so be paying attention to that. I know that you guys were commenting that these moves are pretty rapid, and that's why I put that little piece about the VIX. If you don't watch the whole video, usually I touch on the VIX at the end. It is very good to pay attention to that part, because what I said was we are seeing the VIX elevated to higher levels somewhere around 20. Okay, when it gets around 20, we start to see very big swings. And you can kind of see this on Apple. We get this swing up, we get a big swing down, we get a big swing up, we get a big swing down, and we're getting a big swing up. So you're going to see more rapid moves on shorter time frames, and I don't want that to scare you out of your overall thinking and your overall trading strategy. Stick to your strategy, be patient, wait for your setup, and then tackle it exactly how you would like to, and maybe just keep those stops either a little bit tighter, because we can see those rapid moves. But if we do see some kind of rapid move up to here in the morning, I overall will be thinking that we are wanting to head to lower levels to find buyers one more time. All right, and Tesla. Okay, Tesla here, we actually, if you were subscribed, we said that we could actually see some more dramatic selling, but we are at extreme oversold levels on a 30-minute. So it'd make total sense for us to want to kind of not necessarily flag out here, but see some kind of bounce on a shorter time frame. Okay, so we are seeing that bounce on shorter time frame. We're holding up above most of the moving averages on this shorter time frame right here. So we got back above that 200 on a 30-minute. That could with some more consolidation, maybe project us a little bit higher. I overall would like people not to get too excited going into the earnings on Tesla. Okay, I would rather us actually want to like pull back, and then Tesla reports those good earnings, and we can use that to extend higher and maybe test the top of that triangle that we've been talking about ever since the all-time high on Tesla. This isn't necessarily the worst case scenario, right? We're holding right above that 50. We did expect some buyers to be around that 50 on the daily, okay? But we did get that cross on the MACD down here. So overall, this is looking, even though it's a green bar, it could be still a bearish sign that we want to head a little bit lower to find those buyers. I am overall paying attention to the bottom of this triangle here, or this low, okay? So I am paying attention to this low as well, because we could see some kind of double bottom form in Tesla that could give us a hint that we actually want to head to higher levels into the end of the year. Now on Amazon, what did we say? Okay, on Amazon, we were talking about the shorter time frames. We're talking about this wedge and things like that. And we were stating how we actually could head upward into this zone right here, this gap resistance and the gap fill zone here, which is holding as resistance at this point. Now, we didn't necessarily sell off from this level yet. We were actually holding inside of it, which is not the worst sign, okay? But we do have that Bollinger Band right above us. So if we get excited and we get a little too excited tomorrow, we actually could see that fade throughout the day. But as you can see, these Bollinger Bands, they're starting to, tighten up again, which means that as we lead into some kind of contraction between these Bollinger Bands, we could see an expansive move, okay, in the next like week or so. Overall, to get that bull run in the end of the year, I do believe we want to see some kind of sell-off to go grab some buyers at deeper levels, somewhere around that 200-day moving average that then projects us higher to fill this gap, okay? That's what I'm mainly paying attention to on a lot of these charts. If we look at the end of the day, we did start to curl over on Amazon on the 30-minute, meaning we might want to get out of this zone again, okay? We might get those sellers to step back in. That hasn't happened yet, and I think that'll be very dependent on those retail sales numbers in the morning. And we do see this structure, okay, where we bounce up, we consolidate, we bounce up. And if we just go into a very short time frame, say a 5-minute or something like that, we can see how this 5-minute divergence is starting to play out, okay? So this 5-minute divergence is starting to play out, and you are starting to cross on the center line here on the RSI. So we could see a little bit more selling, but it doesn't necessarily mean that this move has to completely fail, okay? We could come back into this little pocket here and then try one more time. I really want to pay attention to that data in the morning, because data has been moving this market, and when volatility is actually at these higher levels, that data can move the market even more to one side. So we really want to pay attention to that retail sales in the morning. On Nvidia, we did go over the daily in my last video, and I'd really like you guys to possibly go and look at that video to get that information, because I do like to pay attention to daily charts more than I pay attention to, like, say 5, 15, or 30 minutes when it is very, very volatile. But what we want to pay attention to is exactly what happened. And if we go into, say, a 15-minute, we can see that what we were talking about on Nvidia was a retest of this little trend that we broke out of. And as you can see throughout the day, we actually did come up and retest that area, and we kind of came off of it. And maybe now we are setting up some kind of double top up here to extend us to the downside to go find those buyers that I was talking about in my last episode. So if you are an Nvidia trader, I would highly encourage you to click on my channel and just look at yesterday's video. I think that it had some good information in it, and you can use some of that information to kind of find out whether or not we are starting to bounce from certain levels. Now, what we talked about in yields is they don't necessarily know where they want to go at this point, okay? We're at a point where a bunch of Fed speakers are going to be talking and things like that, but overall, the data is what is going to move the market at this point. We were just discussing in my last video how we don't know what we want to do. We want to go down really fast, and then we want to go up with the rates really fast, then we want to go down really fast, and now look at that, we gap up and we want to go up really fast. So from this level here, we did take back the top of our broken channel here. So our channel actually broke to the upside, and then we broke below it, and now we took it back today. So there is potential in the yields to actually come up and test these highs or even come and test these closing highs up here, what we want to do is pay attention to the data, especially with these yields, because the data is going to move these yields one way or the other. And something we can pay attention to is this actual gap reversal. Okay, we actually got a gap reversal on TLT right here. Okay, so we gapped up, right? We gapped up and then we gapped down. So this is a reversal signal. And if you pay attention to gaps and things like that, and we actually could see this start to come down to that 8250 point, which is the lows from, I believe that was 2007 or something like that. So these are the lows at that point, and that's the point that I'm going to pay attention to in the future because I am a TLT investor. The reason I say we could get a reaction from this level, because if we do see, tomorrow's numbers come out as bad for the market and we see a sudden drop in TLT, that means those rates are actually going to go higher and that will cause the market to sell off. But then we could get some kind of pause. Okay, I've been talking about a pause in my last video, and we could see a pause from Jerome Powell on Thursday, since he talks at noon on Thursday, and that will give us a big reaction if he starts to state that. I want you guys to understand that if he would say he is pausing in this week, okay, we will see a big pop in the market, and we will see a big pop in TLT. And if that pop does happen, we just want to pay attention to the 2-year and the 10-year starting to uninvert. Okay, so keep your eyes on those yields. If the 2-year goes below the 10-year, it doesn't mean that we have to sell off with a recession right away. We can stay uninverted for a little bit, but as history tells us, when we do uninvert, we do at some point in the next, I believe, 6 months to a year, we do want to see some kind of recession. Okay, so just pay attention to that. You do have island reversal on TLT, and that could be hinting that that could happen in the market tomorrow. One thing that I'm paying attention to that I don't normally talk about is the Dow. Okay, Dow Jones Industrial here. We do want to pay attention to this because we see a pretty big hourly divergence that could be forming. Okay, this has not confirmed yet, but we do see this MACD here giving us that divergence that could confirm, and we see that is proven as well on the RSI, and it's very significant. So if we do see a drop out of this wedge, I am going to expect us to come down and test these lows one more time. It's dark in here again because it's been raining here, all right? So I'm sorry it's so dark and it looks like I'm like an evil villain or something with my stash, but I just wanted to tell you guys the overall takeaway. Okay, the overall takeaway from this video is we need to be paying attention to the data, but I still think the overall thing that I want to pay attention to later on in this week is going to be what Jerome Powell says on Thursday. I believe that's going to be very, very important for the market. This data is going to move the market, and we're going to see much bigger swings if the VIX remains elevated. And we do have an 85% chance of a down day in the next 2 trading sessions. Okay, so pay attention to that. I hope you guys have all the luck in the world trading tomorrow. I'll be here tomorrow night, so please, thank you for subscribing, but please subscribe if you want to see more of my videos in the future, all right? Peace.